Good evening. If you can hear me, please say hi. Good evening. If you can hear me, please say hi. Type hi on the chat box. All right, beautiful. All right. Matthew, for the last time, off your camera if not, I'll remove it from this class. Also, I give Matthew. Abdul Hamid, off your camera if not, I'll remove it from this class. If you can hear me, please say hi. Good evening. If you can hear me, please say hi. Type hi on the chat box. All right, let's move on. Now, if you are here in this class, this day 4, I want to say congratulations. This is what makes you a trader, your consistency and your doggedness. This is what makes you a trader. And if you are here in this class, trust me, this class is going to be amazing for you. Amazing for you. Amazing for you. This class is going to be amazing for you. Now we are diving into SMC concepts today. We are diving into SMC concepts today. We are diving into SMC concepts today. With SMC concepts, you can fund your life account and trade because these concepts are very strong and very powerful. Someone is saying they cannot hear me. If you can hear me, say I can hear you. All right, so let's push. 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 Okay. SMC concepts. SMC concepts. SMC means smart money concept, and this is a concept that has given a lot of people money. All right, myself personally, I struggled a lot in forex until I was able to grasp. Myself personally, I struggled a lot in forex until I was able to grasp this SMC concept. All right, those of you that have been trading before, you realize that SMC concept gives you more RR. RR means risk to reward if you are just here. So I'll try as much as possible to break every concept I'm going to teach, break it down to the minimum. All right, I'll try and break it down to the minimum. I'll try and break it down to the minimum and explain as though I'm explaining to people that are hearing it for the first time. Every concept I'm going to teach right now, I'll try and explain it I'll try and break it down as slow as I can. All right, so that if you're here for the first time, you can catch up. Now, before we dive in, bring out your biros, bring out your books, because there are rules that guide the trading system, and you have to know those rules. There are rules that guide the trading system, and you have to know those rules. Let's move on. All right. Now, let's start from an order block. Let's start from what an order block means. Let's start from another block. What is an order block? Now we have started SFC concepts. But let's first start from on another block. Now, right, an order block is the last candle before the start of a new move that breaks structure. An order block is the last candle before the start of a new move that breaks structure. Meaning that if you are having down candles, you're having candles like this. This is a candle, all right. Then this is a candle. Then this is a candle. Then you now start having up candles. An order block is the last candle before the start of a new move that breaks structure. So, for example, you are seeing red, 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 and then green, green, green. Where is the other block here? The other block here is where the last red candle before the green move. So you have to mark it from the top of the candle to the bottom of the candle. That is another block. So if you look at examples from here, if you look at this, this is a downward move. Where is the other block on this move? Where's the other block here? Realize that the other block here, sorry, realize that the other block here, all right, is where's the other block here? The other block here is this candle here, this red, this green candle here. So you have to mark it and extend it. That is the other block. Which on other block here, look at this move now. Where's the other block here? The last green candle. That's the other block. So the last candle of the opposite move. All right. The other block is the last candle of the opposite move. So if you're having red, 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 red going down, also the next time you're having green, 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 green going up. All right. That is the other block. So again, where's the other block here in this move? This is the other block here. The other block is the last opposite candle. For the last time, where's the other block here? In this move now, this upward move, where's the other block? This red candle. All right. Let's use one last one. Give us another block here. Your other block here is where? Okay, your other block here is where? Look at this downward move. The other block is where is the last where? The last green candle before the start of any move. I believe that's clear. All right. So having said that, I just want you to put that other block in your left hand while we move on. I just wanted you to understand where that block and put it in your left hand while we move on because we are going to need it. All right. So let's go into SMC concept. SMC means money concept. All right. And in the first class, when I started training you guys, I told you that we have three types of market. We have the upward trend, the downward trend, and then the consolidated market. Now we mentioned that an upward trend is like this. An upward trend is like this, right? Now, what SMC does is that SMC goes into the intricacies of these moves, and SMC tells you why that market is moving like that, where it will move to, what's making that market move like that, and how you can also benefit from that market. You can see that I'm talking slowly because I want you to understand. I'm not talking with passion right now because I want you to understand really. So you might need to follow me. If you can follow me for the next 20 minutes without getting distracted, you understand this. So this is an upward movement, and then we have a what? We have a downward movement. So we have upward and downward, right? Good. Having said that, this is an upward movement, this is a downward movement, all right? And then let's now go to terminologies. Terminology number one, what is a break of structure? Now, yesterday when we were talking about levels, I told you that levels can be what? Can be trend line, can be support and resistance, can be supply and demand. Right now, it is now time to go to SMC 101 BOS. Now, what is a break of structure? A break of structure. If you are new in trading or if you are old in trading, because I've heard this a lot of time. Now, a break of structure is simply a break of the market. For example, a structure is something that stands on its own, like this. A structure is something that stands on its own, like this. Now, when we say a break of structure, it means that something else has broken this structure. A structure is a system, a structure is a standing, a structure is something that stands on its own. So when we say a break of structure, it means that if this market moves like this, a break of structure simply means that another market now moves above it and breaks it. All right. This is a market standing on its own, a system standing on its own, a structure standing on its own, right? And another market now moves and breaks it like this. This is what we call a break of structure. And how do we identify a break of structure? Now we use tools to identify the break of structure. Now this place where the market broke is where you call a break of structure. So you mark out your break of structure here from this place that market broke and extend it to right. That point is your break of structure. Follow me attentively. A break of structure is interpreted as BOS, a boss, or a break of structure, BOS, break of structure. I'm going somewhere. If you follow me, you'll be happy. In fact, if you follow me right now, your day will be made. In fact, your year will be made if you follow me right now. A BOS is a market standing on its own, and all of a sudden another market comes and breaks above it. All right, and that is what we call a break of structure. So, for example, this market is standing on its own like this, like this. The market is standing on its own like this. Market standing on its own like this. Yeah. Now another market comes and breaks above it. All right. This here is what we call a break of structure. Do you get? The market is standing on its own. Market standing on its own, and all of a sudden another market comes and breaks above it. That's what we call a break of structure. All right. So this is a market now. See this. This is a market now. This is a market standing on its own. Then what do we have? We have another market comes and breaks above it. All right. That level that it breaks above, that level there that it breaks above here, is what we mean by a break of structure. So what we do is that we mark out that level because it is important. What we do is that we mark out that level because it is what is important. So for the last time, a break of structure is what? Market standing on its own, and all of a sudden another market comes and breaks above it. Right. So where's your BOS? Your BOS is like this. Your BOS is here. This level here. This is your BOS here. All right. And you want to mark it like this. You want to mark it like this, and then label it BOS, break of structure. So you label it as BOS, break of structure. Are we good? Questions, confusions? Questions, confusion, feedbacks, question, confusion, feedbacks. Some of you are smart. Some of you will be like, why are you emphasizing this BOS? I'll tell you. So no questions, right? I'm guessing no questions. All right. So let's move on. Let's move on. Now, rule number one. Rule number one. Rule number one. Remember I told you that this is what? This is your uptrend. Now, what do you notice in this your uptrend? What do you notice in your uptrend? You didn't realize that in your uptrend there are BOSs. Do you realize that in your uptrend there are many BOS? We have your BOS here. We have BOS here. We have BOS here. Now, right, rule number one. Rule number one. Every time you see a BOS, market must retrace. There must be a retracement after every BOS. That's rule number one. Please write down. There must be a retracement after every BOS. Please write down. This is important. Rule number two. Rule number two. If we see a BOS, it means that the market has intentions to go higher. Now, you might be asking me, why am I emphasizing this? Don't forget, all we do in Forex is to know when to buy and know when to sell. So a BOS, having studied it, a BOS rule number two says that if markets will go higher, then there should be a what? A BOS. Rule number one is what? After every BOS, there is a retracement. A retracement is a little pullback. Retracement is a little pullback. So after your BOS here, after your BOS, there's always a what? A retracement. Now that retracement is rule one. After every BOS, there's retracement. Now rule two now comes in. Rule two is that if you see a BOS, that means market is intending to go higher. But before it goes higher, like a catapult, it has to pull back first, which is your what? Which is your rule number one. So after rule number one is given, rule number two comes into play. So after every pullback, there's a shoot up like this. So hence this thing on your chart. So you see our BOS. After a BOS, what do we have? A pullback. After the pullback, what do we have? A bigger BOS. So as long as markets keep on making BOSs, markets must keep on going higher. Are you with me? Are you with me, guys? Are you with me? This is SMC. Welcome to class. This is SMC. Welcome to class. This is now, you are now trading Forex. You are now trading Forex. All right, so let's move on. Let's move on. So in our upward trend, we can see that upward trend moves like this. That is how our upward trend moves. So what is rule number one? Rule number one is that what? If we see a BOS, markets must retrace after every BOS, right? Is that not rule number one? So this is a BOS. You have your retracement. The retracement then it makes another BOS, which is number two. You realize that after the second BOS, what happens? Market pulls down again and makes another BOS. That's number three. You see that after number three BOS, market pulls down again and makes another BOS. That's number four. So let's go over rule number one. Rule number one is what? Rule number one is that after every BOS, there must be a retracement. Rule number two is what? If market must continue to go up, then there must be what? There must be BOS. That means that by deduction, if we stop seeing BOS, it means that market character has changed. This is what I mean. My system is kind of lagging. My system is kind of lagging. I don't know why. I think there are too many applications open on it. Guys, please give me a minute. I think I have to. I think I have to restart this class. This is not suiting me. It's lagging. Give me a minute. I'll be back in a few minutes.